Hey everyone, it's Jaden here and welcome back to Dollar a Day. In this video, I'm going to be going through my top 2 dividend stock picks that I believe are a great buy right now. And just in case you were wondering, a dividend is a company's way of rewarding you as the investor for investing in their stocks. Dividends are usually paid out every 3 months and you as the investor can choose to do whatever you want with that money. For me, right now, I'm choosing to reinvest those dividends to buying more shares of that stock. Alright, so stock number 1 is Walgreens, ticker symbol WBA. If you're from the States, you've probably seen or maybe even been to one of their stores, as they are one of the biggest drugstores in the US. They have over 9,200 stores all over the country. And if you're from the East Coast, you've probably seen their small stores, Duane Reade. If we look at the historical price chart, we can see that this company has been through a lot of negativity, primarily due to competition, mainly from e-commerce. But when we look at the valuations, currently the stock is sitting at a forward PE of under 8. And considering that the average for value stocks is around 15 to 17, this company is extremely undervalued. Now, some investors may have some concern over the short-term financial position, but the company is making moves to cut over $1.5 billion in costs, and they're very well positioned for the long term. Also, when we look at the past few years of revenues, we can see that there is consistent growth, showing that there is a very loyal consumer base. Now, let's take a look at their dividends. This chart by itself is worth over 1,000 words. This company has been paying out its investors for the past 45 years, increasing their dividends each year. Their 10-year dividend growth rate is over 13%. If you just think about all the ups and downs that this economy went through for the past 45 years, and the fact that they are able to be this consistent, it just shows you how committed they are to their dividend, but also their strength as a company. As a dividend paying company, this is one that I definitely feel good buying and holding for a long time. Now, there are 2 very exciting things to look forward to in this company. And the first one is their partnership with VillageMD to provide primary care. Already, they have plans to open up 700 clinics. Now, I think this is a huge opportunity for growth, as there's definitely a trend from people going from bigger hospitals to more private offices and clinics, as they are closer, cheaper, and more accessible, making the whole experience more convenient. Just to give you a better idea of this industry, let's take a look at some data from commercial real estate. If we look at the green line here, which represents vacancy levels for medical office, we can see that it's consistently been going down over the past 10 years, despite all of the new construction. What this means is that there is a very strong demand for medical office, as physicians and doctors are setting up their own medical offices and clinics. And we see here that the asking rents for medical office spaces have also been consistently going up the past 10 years. And I know some people might be thinking, can't every pharmacy just partner up to do the same thing? Yes, that is true, but I think Walgreens has an advantage because 1, they're doing it earlier on, and number 2, they're physically located to close to 80% of the US population, making them that much more accessible. If you're in the States and you look up Walgreens, wherever you go, there's a very good chance that there's a Walgreens within 5 miles of wherever you are. And if a big reason of why people aren't going to hospitals is because of convenience, then having something nearby would definitely make it convenient. Now, their second very exciting thing is their air delivery. Walgreens has partnered with Wing, which is owned by Google, to provide drone-based deliveries to their customers. This means that you can order something on your app and get it delivered to your house within a few hours. They're still planning and testing things out on a smaller scale, but once this scales nationally, this will be a total game changer. And chances are you've probably seen a lot of companies go towards this trend of same-day deliveries with drones. But Walgreens, again, has an advantage because they have physical presence close to almost all of the US population. And speaking of deliveries, if a company like Amazon wanted to invest further into the pharmacy industry, I think Walgreens would be a great company for them to buy out. Not that I would want this to happen, but if you think about Amazon's cash position with their customer service, combined with Walgreens' loyal customer base and their physical presence, I think the two companies would dominate that sector. And personally, I've been watching this stock for a while, and I did manage to get some shares when the second quarter earnings showed a little bit of a loss due to the coronavirus. Now, let's move on to stock number 2. WP Carey, ticker symbol WPC. So WP Carey is a REIT, which stands for Real Estate Investment Trust. And what that means is it's basically a company that owns and makes money through real estate. And chances are you probably haven't heard of this company, especially because there's so much negativity around REITs and commercial real estate right now because of the pandemic. But it's definitely worth taking a look at. WP Carey is a very diversified REIT that owns primarily warehouse and industrial properties, along with some retail, office, and self-storage. Right now, many REITs have been suffering because they had to close down their properties due to the pandemic. But WPC, even as a REIT, was almost untouched. If we look at this chart that shows us the performance earlier this year based on property type, we can see here that industrial had the least impact from the pandemic. A great way to see this translate actually into the company is to look at their rent collection. Looking at the percent of rent collected, we can see that it never fell under 96%, which is truly outstanding. And even with these close to bulletproof numbers, this company sits at a price to funds from operations ratio of 15. Considering that the average for most REITs is about 17, this is a very good price. And if you have no idea what these terms mean, just think of it like this. When you go to the grocery store and you buy something, you look at the price per unit or the price per ounce. It's kind of like that, but except in this case, you're looking at the price per earnings of the company. And looking at the dividends of this company, they have been raising their dividend ever since they went public in 1998. Although they don't have as long of a track record as Walgreens because it's a newer company, it definitely seems dependable. But the thing to highlight is the yield rate of these dividends. Currently, it's sitting close to 6%. That's a pretty high yield. And to be objective, the argument can be made that WP Carey's tenants aren't as stable compared to other elite REITs, such as Realty Income, which has a very investment grade rated tenant roster. But I think the dividend yield more than makes up for this less superior tenant roster. In other words, you're getting a very good risk return. And apart from the dividend yield, if we look at the lease expirations of these tenants, more than half of their leases expire after 2030. That means unless a big bulk of these tenants go bankrupt, WP Carey's rents are pretty much guaranteed. And 99% of these leases, which are very long, already have rental escalations baked into their contracts. This company's even been through 2 big recessions now, and they've remained very untouched in their occupancy levels. I think the company's dividend yield and lease terms make it a very good, stable, long-term investment. Right now, analysts put the company's fair value stock price at $104. This is taking into account risk, yield, and discounted future cash flows. I think it might be a little bit aggressive, but there is no doubt this company is undervalued right now. And again, this is a dividend stock, so don't be too concerned about getting price appreciation, but rather focus on the dividend. And just to give you an idea of how much of an impact dividends can make on your total return, If you put $1,000 into this company about 20 years ago and never put a single dollar more into the company, but reinvested all the dividends that the company paid you, today your total investment would be worth $14,450. And if you kept that money in the company today, in just this year alone, you'd be getting a dividend payout of $859. And there's a good chance that within a few years, you'll be getting paid over $1,000, which is your initial investment. Now, to sum it all up, I think Walgreens and WP Carey are definitely a great dividend stock to hold for long term and for passive income. If you're looking to sell within a few months, these aren't the stocks for you. And as always, share this video with anyone that you think can benefit from it. And thank you to everyone for all the feedback and support and helping me get to 100 subscribers. I really appreciate it.